Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, December 18th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We had quite a fall in the previous session. The last two trading sessions have been mostly straight down here after the failed absorption signature, a big breakdown, a major continuation in the following day, and now we're having the counter trend pop back toward the previous session's midpoint. That is very typical after a major two-day decline like we're seeing here. However, we're still not out of the weeds. We basically see right here that 25.29 is within view here. We got within a couple of points of that level here the previous session on the futures. I believe the SPX cash actually hit below the year's lows. And this is something we talked about here recently, that we could easily test that within a day or two from those levels up here if it really wanted to, and here it is already down into that zone. Again, we've talked about if price were to test these levels below here, anywhere below 24, between 2400, 2450 and 2500, that zone could provide a very significant bounce opportunity. That could be a major opportunity for bulls to defend, but we've got to likely push through it at first and see what happens here. And if prices can find some sort of rejection below 2500 or into 2400, that could provide a solid bounce back toward 2700 and maybe back toward the 2850, 2800 zone. Overall, this has been a large sideways market. It's something we talked about since the very first decline we saw last year, or beginning of this year, where price dropped from those January highs into the first week of February lows. And I mentioned that that sell-off was so significant it was likely designed to keep prices within that range throughout the year. And here we are heading into the end of the year, and we're still inside this range. So again, this range has gravity that's so large that if we do push down out of it, it may be similar to what we saw here before, that we come right back into it. So we don't necessarily have to break down and continue lower, although we will see what the Fed says here Wednesday. And the FOMC meeting, the two-day meeting, begins today, heading into Wednesday's afternoon, where they will release the Fed interest rate decision. That will be important here, and this will be the third time now that the FOMC key level will be lower. Last time was in September, November, and this one now will be December, lower each and every time. These levels have been offered immediately after being announced in the recent period here. So again, it wouldn't surprise me if we see the number and go offered again and drop, say, into 2450. That could provide, again, another opportunity where perhaps we see some sort of rejection and a bounce back. If prices can't reclaim back above 25.29, they could get serious and we could continue trending lower by some degree. Again, we have this key range to watch. These are the key levels, and you start to look at the extensions down below, and that could give us some longer term targets. 21.79.5 would be the 100% target to the downside based off of this key range. So if prices were to break down through 25.29 and cannot reestablish back above that level, then we'd start looking at downside targets as low as 21.79.5. So again, we got to watch this zone very closely and see how it plays out. All eyes on the Fed on Wednesday. If we take a look now at the NQ, you'll notice here again the NQ not quite at the lows of the year just yet, but everything is still trending downward, barely took out the low here recently, and again, we could be looking at more near-term weakness towards 62 and below. A major LVN comes into play in the 6100 zone, and again, that could be an opportunity here to watch for some sort of rejection that leads us back up the range, and overall this market remains weak until proven otherwise. We take a look at crude oil. This one finally took out some recent lows here. Sideways range, major compression. I mentioned before that this compression is so significant here that it could lead to a major breakout move at some point. We got a breakdown here in the previous session where price broke below the previous month's close price. That's that blue dotted line. And once you break through that level, you can typically see much more selling pressure ahead. Right now, we flushed an overnight trading down to as low as 48.13 and are starting to form a little tail at the lower end of the range. However, price is testing VWAP at this time, which is 49.02 in the 512 tick chart. Any failure to get back above that 49 level could suggest more downside. So we'll keep an eye on how this plays out. But it would not surprise me. It would not surprise me that if price were to close back above the previous session's close and low, that we form a lower low that leads to a return back up toward recent highs as we continue to trade within this range. So it wouldn't surprise me if we're able to reclaim the previous session's close, that we perhaps quietly swing higher. But again, I will note, this market has not been able to put two up days together that are meaningful in any way. So that would be a long shot at this point, as this market continues to look very, very heavy. Taking a look at gold. In the previous session here, I mentioned that this could be a good buy opportunity as it was inside the 8-period average, which is 8-period and 21-period, which is the trigger zone here for an upside buy. And it led to a nice return back toward 1255s. We're right in that zone right now, rejecting back toward 1251. Just a little bit here, but overall, this market remains bullish. It remains bullish. It's not runaway bullish, but it's developing for a much bigger move down the road. And as soon as price can get above 1260 again, it starts to work higher toward that 1287.60 target that we talked about quite a bit back. And overall, this market has been coiling up, building that energy for a bigger move. Any failure to hold 1235, 1234 there could suggest a little bit wider of a pullback. We've seen that before here, and that could easily happen, and that could still be a buy for a continuation. So overall, gold continues to be a modest buy opportunity right now, but starting to see a little bit of a rejection here off the near-term highs. Lastly, we'll take a look at RTY. RTY is through the lows of the year and is holding below those lows at the moment. So here's the low of the year right there, and we broke down below it in the previous session, and we now have a little inside day that's playing out. 1420, 1423, that zone, very important. And right now we have a very clear downtrend. Any bounce right now could be a selling opportunity again, as this thing continues to try to find a low. Right now we are in the lower edge of the profile on this view here. 1350 to 1375 is major lows there, and taking out those lows could provide some sort of a bounce. But again, in order to take them out, you got to go through them. So right now, still trending downward. All right, that is it for now. We'll see how it plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.